What's up, everybody? We have Steve Kalayjian, legendary trader, 30 plus years of experience trading the markets on Wall Street Tactical today. Steve, how are you?
I'm great, everybody, and Happy New Year to everybody.
Fantastic. We're going to go through just a couple of questions. This is mostly for you as viewers. You may know Steve. He's been on Cheddar. You may have seen him on TD Ameritrade Network, Bloomberg, CNBC. He's been around for a long time, legendary trader. He's been doing this full time for 30 plus years. Any insight he has is valuable. Now, we want to talk about general ideas, but then we'll get into kind of specifics in the market. General idea, the first thing that we're going to start off is, which is trending, and I hate to do this, but Elon Musk is claiming there's going to be a financial recession 2022, 2023. What are your thoughts on that in the market? Do you think that the current S&P price is overvalued? Do you see a 25% correction there? What are your thoughts?
Well, again, Elon is very smart, and I totally agree with him. I'm seeing a complete disconnect here. And I do believe that prices are significantly overvalued. I'm hoping they go a lot higher because I'm looking at reverse ETFs for the short side, like the SPXUs, the SQQQs, the QIDs, the SDOW, SDOW. I think these are going to have huge potential for gains to the upside. Probably, I'm thinking the mid to end of the first quarter. I think if the Dow gets above the 38,000 level, 37.5, 38,000, I think you're going to get your pullback. Again, 25% pretty much brings you down to roughly 29, 30,000. But again, it's the least, when you least expect it is when they go down. In my opinion, I've been doing this since '83, right? So 17 and 22 is this August 1st will be 39 years. And I will tell you that they go down a lot faster than they go up. So I do agree with him. I'm not, based upon my work, I'm seeing sell divergences already occur. I do think that it's getting long in the tooth here. Remember, we've been in this uptrend since March of 2020. On my weekly charts, I've had a buy signal around the 18,900, 19,002 level. We got that blip back up, and we never look back. I mean, it's ridiculous. It's 18,000 points higher since then. And, whether it was an overreaction or not, that's what I love. I love when there's an overreaction. We haven't seen that blow off yet to the upside. And that's what I'm hoping we get in the first quarter. And then I think the short position to hold. I just can't. First of all, I mean, if you're a technical person, in my opinion, every gap gets filled, and there are so many gaps below the market that eventually these gaps will get filled. I don't have a crystal ball when, but I do believe in the second quarter, you're going to start seeing a pretty nasty decline going into at least for 3 to 5 months next year.
So we're at Wall Street Tactical. We're really focused on finding undervalued stocks that have good technical analysis, good balance sheet, good future earnings, good return on capital, that haven't really received the press and seen the uptick on the catalyst yet. So we've got a few stocks that we have on the channel that are OTC stocks, over the counter markets, that are really working on getting uplisted, have purchase orders in place, have licensing deals in place. They've got cash flow coming in. Are there any over-the-counter stocks or positions that you're looking at currently? And do you have any advice for viewers? Because this has been the number one question of our viewers, because they're all looking at, penny stocks to trade. And that's just the general question from the viewers.
Yeah. So it's a great question. When you have such a significant run up, I'm not a fundamental trader. So basically everything I do is all technical based, mathematical based. And so if you talk about undervalued, you can look at like I said, the triple shorts, they're significantly undervalued. I know it's not a company, it's just an ETF. However, I'm not really in that space where I'm going to take the time and do the research, and and get the data, like how many people walked into, into Best Buy, stand there with a handheld and say, oh, okay, 500 people walked in and 300 people left with something in their hands. Again, the data, supports that people are still spending. However, the one thing I think that's going to really hold truth here is that the Federal Reserve has been really, I think, is in a bind here. I think that's the next shoe to drop, and that's what's going to cause the market to have this tailspin going into the second quarter. I've been around a long time, like you said, and I remember when the Dow hit 10,000, the Fed funds rates were 4.5%, 4.75%, almost nearing 5%. That's when the Dow was at 10,000. Wow. Now you're at 36, almost 37,000. You got a 0% interest Fed funds here, 0 to 0.25%. And the Federal Reserve has maintained that, whenever inflationary targets get above 2%, well, I have data that shows inflation is at 6.8% right now. And the government wants to blame it on, I don't care what they blame it on, if it's, things getting held up at the dock, supply chain, it's still irrelevant. You go buy lumber, it's 40% higher. I mean, I have all the numbers. I mean, I'm not going to read them all out to you, but it's staggering. Milk, gasoline. I mean, gasoline was $2.20. Oil
and meat
was negative 40 at one point. I told my kids, I said, Daddy's not filling up the pool this year. I said, why? I said, I'm getting 25,000 gallons of oil and I'm going to wait. And I said, I was like, not even joking around. I wanted to buy a couple contracts and fill my pool up, right? And put the black gold in my pool because I knew negative 40, but they wouldn't let you buy it. You can only liquidate positions when oil hit negative 40. And that would have been worth well over $1.5 million now. But the thing is that, and yeah, there's a little comedy to that. But again, I knew negative 40 oil. I've never seen that. Never did I ever see a negative 3,000 Dow. And I've been around, I remember during the days of long-term capital, the Dow dropped more than 500. You thought the end of the world. I was on the floor of the New York Stock Exchange in the crash of '87. So right. I've seen things. But as far as fundamental analysis and what people are looking for, where you're going to get your best buck is to do the research on a lot of pharmaceutical stocks, right, that are in transition or growing, where potentially that if a drug gets approved, then you can have. I remember I was in a stock one time, I had a pretty big position, and I knew that it was, risky. I was willing to take the risk. They could have got denied or they could have got approved, and that's all. It's A or B, right? And so it got approved. Then next thing I know, I couldn't sell it fast enough. Like that one, just tried to sell, get out of my loan. I'm like, oh my God, what a move. And then it completely, a week and a half later, went right back to where I owned it originally, like $2 or something like that, $1.50. But it shot up to like 10, 12, like that on a pretty big position. That's good money. But the thing is, that was something because that was a fluke. I was into the stock. I heard some good things about it. I believed in the science that they were doing. And I said, I'm just going to take a position. I could lose it. Okay, then it's a write-off, or I can make it, which is not something I normally do, right? But I just had a good feeling about this one. So if people are, look at the assets. So Apple hit 188 today. I mean, the spiders, everything is at significant levels. I have people who day trade the market, don't even look at the QQQs anymore because this is too expensive. They're looking at the TQQQs, which is a third of the price practically, right? So price inflation has significantly hurt the retail trader because of, if they're going to day trade, you need the $25,000 in your account. That's why a lot of people are shifting to options. They're doing put spreads, they're doing call spreads, and there's no restrictions on things like that. So today, when we got the big sell reversal earlier in the morning, the Nasdaq was just caught the short first bounce. The next thing you know, Nasdaq dropped like 170 points, and then at around about
Tesla dropped 150, pulled the S&P down.
Well, yeah, I think Tesla ended up being down 47 on the day. Roku was really a big loser today. Again, so and I just more or less, I think a few months ago, maybe 5 months ago, 6 months ago, Roku was in the 400 range. And I actually said to my friend, "What are you doing?" He says, "Oh, I'm keeping this stock forever." And I said, "I don't know. This thing's long in the tooth here. I don't know. Everybody's streaming this, that, blah, blah, blah. And,
Right.
it's got the price cut in half." So I believe in trading them. And I believe that there's more money to be made in day trading the market than buying and holding, unless, you get some significant aberration in the market, like what we saw in March of 2020. And I've seen, trust me, I've been around a long time. I've seen a lot of aberrations.
That was a massive one. March 2020 was massive.
Yeah. I mean, it was monstrous. And, I was, are you kidding me? I was, when was it, in 08 with the long-term, with the subprime market and the mortgage debacle and the banks failing and this and that. The Dow was below 6,700. I tried to buy spiders. And I was in, I think, where was I that day? I was in a meeting, and I ran to buy diamonds, to buy spiders, to buy Qs, to buy everything. But it was like, everything froze. And it was just, that's how the markets were being reactive, Unfortunately, 9/11 was a bad day too, because obviously, the uncertainty of what was going on in the world, and the market shut down for a period of days, and then gapped down and then rallied back. The Fed really came to the rescue on cutting interest rates during that period. So I do believe that there's enough volatility in the markets. And so I built algorithms. I can see market direction, intraday, intermediate, and long term. That's what I teach here at Trade Easy on my streaming channel. But I'm seeing more and more people, from beginners to advanced traders, using these analytics to help them, and they see it right on what I'm doing. And there's an old notion that people are fearful of pit bulls because of their reputation. Well, people are real, and that's not true. I know every pit bull I've ever seen is the most loving dog in the world, and I'm a dog nut, but people are also fearful of day trading. This shouldn't be, because if you have the right technology, the right tools in anything that you do, you're going to be successful. And I spent almost 9 years of my life doing the studies, the research, and building these analytics and these algorithms that I spent. Mm-hmm. So for me, it just comes easy. I see it, boom, it's all mathematics, and then you go from there, up and or down.
So we're going to talk about a couple specific topics here. So obviously at Wall Street Tactical, we focus on undervalued stocks, and we tell all of our viewership, hold minimum of 6 months to a year. If you want to day trade, we don't discourage that. We know that there is a lot of money to be made in the intraday. For example, volatility on stocks like Tesla, big drops on NVIDIA, and a lot of viewers and retail traders are buying NVIDIA calls, Ford calls. There was actually a trader yesterday. He made, he put in a significant amount of capital, $250,000. He made about $460K on Ford option calls, right? And if you look at Ford, 1 year, it's over 100% return. Just
I mean, I remember, I think the stock was like 7 or 8 at one point,
exactly.
Or 9.
It was at $11 last year.
Yeah, 11. I mean, and if it went from 11 to 11.20, it's like moving a glacier. Right. It just never moved. It just stayed there.
And now it's at $25. So there's a lot of hype going around EV. People are buying into companies like Toyota Motor. So Toyota's getting a lot of trending in terms of what we look at, like Quiver Quant, and we look at the trending, what stocks are trending. Obviously, last year was an insane year. There was GameStop, AMC, huge retail trader craze. In terms of the market, there was probably more people that have entered the market who had no financial background. New traders were coming in by the millions with apps like Robinhood, Webull. They really kind of cornered that with zero commission trading. Right. So you have a much larger pool of traders, of retail traders, probably than ever before in the history of trading. And I think that has a lot of effect on the market. The Reddit phenomena is a very important thing to study, because it's changed the way financial markets work. When you have 9 million people on a Reddit thread, all kind of pushing something in a direction, right? It's very interesting to kind of look at. So we're looking at stocks that have had huge drops: DocuSign, PayPal, Alibaba, just these three. We
Roku.
want to talk specifically just about these three because PayPal's lost kind of their entire annual gain. Alibaba's they're almost at the price they came into 5 years ago. All right. And then DocuSign had a 50% deduction on their share price. It was massive. So when looking at these types of stocks, that's not surprising to you. You've been in the market for a long time. You've seen top companies come down. The notion what a lot of our viewers have is, buy on the dip. You said something very importantly in one of your videos: never average down.
Never.
Interview with Speed Trader. So why don't you talk a little bit about that for the viewers?
So the classic story is when I was working on the Florida American Stock Exchange in 1983, I was standing out front. I was a specialist clerk, and right behind me was a stock called American Can. It was a Dow 30 stock. And I had $3,000 to my name, so I opened up an account with my father's friend at the member firm. And remember, minimum wage was $2.10 an hour back then. So I worked 1,400 and whatever hours to accumulate that $3,000, right? Wow. Doing side jobs here or there. That $3,000 was like everything to me, right? Back in 83. Mm-hmm. And, I was 20 years old. I opened up this account, and next thing I know, I said, screw it. I'm going to learn options the hard way. I'm going to trade options. So I called them up. I said, I never forget this trade as long as I live. I want to buy 5 50 calls at 2 3/4. I hear the broker order came out. It wasn't electronic. He walked out. American Cam, Feb 50 calls, 2 3/4, 5 sold. Boom. Gets a report. I get the report. So now stock's trading 51.5. Now this is only October, so I had 5 months to hold these options. Make a long story short, I had about $1,500 left. Trades down to 2, I buy some more. Trades to 1.5, I buy more. Trades to 1, I buy more. Trades to 75 cents, I buy more. 50 cents, I buy more. Whatever I bought, I don't know if I bought total of 15 or 18 contracts, and I was devastated. And I'll never forget, as long as I live, that I literally was sitting like this right before Christmas, and I had no money left to buy presents or anything. And I feel a guy tap me on the back. I turn to him. This is like 4:15, 4:20. Say, hey, kid, go home. You can't turn the machines back on. Thanks. Right. So come January, they're like an eighth of a dollar. Well, an eighth of a dollar from 2 3/4 all the way down. And about a week before expiration, stock went from 41 to 43. And 43 on that Monday, 40. Whatever. It just started gapping up that week. And the day of the expiration, the stock was well above 50, like 52. So my options were trading probably around 2.5, maybe 2 3/4. I think it was 50. Maybe the stock was trading 53 because I remember the options were a lot higher from the 2 3/4 points. So maybe 2 7/8, 3 tops. But remember, I bought them all the way down. So at 3:45, I pick up the phone. I said, Tommy, sell whatever, 18, 20, 50 calls, market, just get me out. And as I'm hanging up the phone, right, a couple minutes later, I see the broker walk in. He sells everything, I don't know, above where I owned the first purchase of 2 3/4. So I knew I sold them. And as I'm watching the broker walk out, I turn and I see my father, who is a floor broker on the American Stock Exchange. And he said, are you out? I said, yeah, I'm out. Yeah. He said, when I came on the floor this Monday, because my father was a floor broker, a member. And he said, when he was walking up the stairs, he saw a penny faced up. And he bent over and he picked the penny up. And he made a wish, he told me. And he said, I wish that my son recoups all his money and makes money on this trade to teach him a lesson. So my father says to me, when I came on the floor Monday, I saw a penny face up and I made a wish that you won't lose any money. So he said, what do you learn from this? Now I'm thinking to myself, I got to give my father the right answer. He's going to knock me out, right? And I said, whenever you have a losing position, you look for a penny faced up. He says, no, you blanking moron. He said, you never average down, right? And then the minute he walked away, I went into Merrill Lynch. I bought 10 call options like a crazy. and
so did you make money on that trade?
Yeah, I did. Yeah, I did. And as he's walking away, with 3 minutes, I go, because the market's open until 4:15. I said, Tommy, buy me Merrill, whatever, 10 contracts, whatever. I forgot. Merrill. I never forget the next trade after American Can went to Merrill Lynch. Those are my first 2 trades ever. And so
wow.
The moral of the story is you got to adhere to stops. You're not bigger than the market. You got to be able to have preservation of capital, and you've got to be able to be disciplined, right?
Right.
So you take all these things, like I teach consistency, discipline, confidence, patience, and patience and passion, right? So I teach those 5 key words daily. I want consistency every single day. I don't care if you make $10 or $10,000. I want you in the black or the whatever people black or the green every single day. But when you're wrong, we got to, every time you're trading and you're now, when we enter our trades, we go in multiple times. That's not average, that's scaling in. But then you got to adhere to your stop, because if you, I mean, there was one time I had a guy in my room, he would not listen to me at all about stops. I called him personally. I said, listen, I want to be bluntly honest with you. I may be the wrong guy for you. If you're going to treat your money like the Wild West, I'm teaching a certain way here using my analytics. And this was during the election, right, of last couple in the 2020 election. And the volatility was crazy. The tweets were crazy. The volatility was crazy. And I said, you got to adhere to stops, right? So I think a lot of people tend to think that they need to be involved, you know, and like you don't trade into earnings. I'd rather go to Atlantic City or wherever they that red or black. I don't know within 4 minutes. I had a guy one time call me up. I was driving into the city, and I'm not going to mention his name, obviously, but it was PayPal. And he said, "Oh my God, I just lost $27,000." I'm like, "Why?" He said, "I was short PayPal into the earnings." And I said, "Okay, I'm pulling over." I said, "You're not bigger than the market. You just gambled. You just hurt your family. And this is moronic behavior." I said. Right. He says, "Steve, can you please help me?" I said, "I'm going to help you under one condition." I said, "And I'm really serious. And if you don't do this, don't call me ever again. But I'm going to help. I'm going to help you. I want you to take a picture of your wife and kids. And wherever you shave every morning, I want that picture glued there. So I have your word. Yes, you have my word. But I want you never to make this mistake ever again. I'll help you make back the money. It may take a little time because, you know, you got a big hit on your account and your capital came down. So we got to rethink this. But I want a picture of your wife and kids wherever you shave every morning. And I want you to say to them, you're sorry and that you'll never do this ever again." Right? Well, 2 months later, he made all the money back. He lives down south. And the guy calls me every so often just to thank me. He is out of the business currently short term because he had to go back to his original business when it got ramped up when the vaccine started and everything. But eventually he'll come back to trade. So people are actually their own worst enemies, right? Yeah. But going back to your point, I was on the phone with an owner of a futures firm, and this weekend alone, 2,600 people signed up for their simulator. 2,600 people really want to learn to trade. Yes. And that's what Trade Easy is all about. Okay. For me to be able to teach them everything, again, no fundamental analysis, right? I mean, you don't have to be a bird brain to walk into any Apple store and see that you're number 49 on the list before you even enter the room, you know, enter the shop. So, but people today, I'm getting calls all around the world that want to learn how to trade. like Brian, who's an endearing friend of mine, likes the low. I mean, likes fundamentals, sees potentially 6 months, 18 months. I mean, I remember Brian when the Dow was at 18.8, 19.3. He said, Steven, it's going to 25,000. As 23,000 came, he says they're going to 28,000. At 28,000, as they were nearing, because they're going to 30,000. He's been dead on the entire move, and he knew it, and I had it as well. But it's the mentality of a lot of beginners today is where they do fractional shares, or they do odd lots, or if they're doing, like, I know my daughter's girlfriend, when Tesla was like 700, she bought, I think, 100 shares. She had some money given to her over the years. I don't know if she bought 50 shares or 100 shares or something like that at 700. I'm like, this stock, I remember I was in an airport and Tesla was trading at 264 and it dropped to 248. I remember in the airport, guy was like this, we were waiting, our plane was late. I said, what's the matter? He goes, oh, I'm long this Tesla at 272. It's 240 now, maybe going to 213. I said, what is the purpose of buying it? He said, long term. I said, then forget it. Forget you have it. I said, they got unbelievable technology, right? They're coming out with, I mean, if you look at in today's world, everything changes overnight, but the combustion engine. 100 years of the combustion engine, and we're still pumping gasoline in our cars, right? But meanwhile, every single day, a new gadget's coming out or a new device, and people got to get it like that because of technology. But the combustion engine's been around for 100 years. I said to the guy, this is new technology. Within 15 to 20 years, we'll be all electric, right? So just hold it, right? Forget you even have it, or even buy more, I said. And we were laughing, joking around. He goes, I guess you're right. You jumped me, you stopped me from selling it, actually, he said to me. And then Tesla goes to 1,200, right? A split and then goes up. So
to those specific stocks like Ford, PayPal, DocuSign that have dropped, do you think DocuSign is done? And maybe you don't trade that way. You don't trade on the fundamental. You don't trade on the long. But you trade intraday, right? You said on previous videos you started out, you had a goal $100 a day, $200, $500, and you just make sure you're black and keep that consistency.
100%.
You actually had a streak that, a 10-year streak. You didn't lose. I don't know if we're allowed to talk about that.
I think I was nearing the 10-year mark. I didn't have a losing month or a losing year.
Right.
And I'm not talking like $1,000 a month. I'm talking big capital. I had $1 billion line of credit, and I was moving the markets. I was probably one of the biggest bull traders.
But that all started with your initial discipline of like $100.
Oh, well. So basically, when I was the age of 13 years old, I was piss broke, and I had a black and white television, and basically, I was able to have a photographic memory, and I was basically, when I got up to bat, I had to borrow a kid's bat. I had to go steal a glove for a tryout, and I paid the guy back 3 weeks later, 4 weeks later, and the guy had tears in his eyes, and I gave him the money back and told him the story. But the the greatest story, and I have so many of them, is consistency, right? And I'm not going to mention his name, but when I went into after I left the Florida New York Stock Exchange, I went to the COMEX. And that man changed my life because he was a very big trader. So when you're a very big trader in the futures market, you stand on the outside of the pits in the open outcry when they had it, no more now. And he took a liking to me. I'm Armenian, he's Greek. And then next thing I know, he says to me, he said, you see that guy over there? I was that guy. He was pointing to a clerk. He said, I just got married. My wife had a baby. I was making $100 a day, $500 a week. And I would go home when the buzzer rang, right? At the end of the day. And then he said to me, I knew that with my baby being born, I needed to try something. So he went into the gold pit and he leased a seat and became what's called a local. Now, a local looks up like this. And nobody wants to trade with locals, because if you're like a Revco or a big firm and you're trying to sell 100 lot in gold, you go 50-50 or 25, 25, 25, 25 or 10, 10, 10 or whatever. You're not going to go 25, 25, 1 to a, and then get an out trade. And these guys want to, and then it's like $500 error. So the locals really were screwed. And his goal was to make $100 a day. And whether he made the $100 a day in the first minute, 5 minutes, hour, he took his trading cards, put them in his pocket, and stopped and watched everything around him. And he did that for 1 month. And if he lost 100, he stopped. But that was his goal: make 100, lose 100, stop, and keep watching. But he was very good. He made $100, and the next month he bumped it up to 200, and the next month 300. So when I first started trading upstairs, I actually had like a $300 gain, which happened like that. And then the broker I gave the order to screwed everything up. It
was this with Compact
Computer. And the irony of this, it was a $341 loss. I'll never forget this. And I said, Joey, that's not right what you did. You missed the print. I was up money. Now I'm down $341. He said, Steve, I'll make it up to you. Still this day, I'm waiting for them to make it up to me, right? And the irony is I became one of the largest day traders in the world in Compact Computer. My first trade upstairs. I used to do anywhere between 3 and up to potentially 10% of the volume on a daily basis, right? But the moral of the story was, after that debacle Compact trade that the broker screwed up on, my goal was to make $100 a day. So after the 3.5 days, I was up $50, right? So 4 days to make back that stupid debacle. Then I got on a roll. And I said, forget, let me take this 1 week to make back that stupid loss, right? And then I'm going to go $100 a day. Then I bumped up to 200. But I did it weekly. Then 300, then 400, then 500, then 600, then 700. I kept every week increasing, right? And then about 11 months later, monstrous P&L, I decided to leave. And the guy knew I was leaving, gave me this great opportunity. I went to go start my own firm. And I had like a very low payout. And I asked him if we can do like a 50-50. And he could have said no, because I was leaving. He was nice enough to give me a big bump up from what I was getting on the deal that we structured originally. And then as I'm walking out the door, I said, hey, Joe, do you mind I ask you one more favor? Now I'm giddy because the money I just made is like insane, right? And more so because he gave me the extra percentages because I asked nicely and he really liked me. And now, like I said, I was leaving. He could have told me, no, you're leaving. The deal is a deal. But he was honorable and he did something really nice. He really liked me and I liked him a lot. And as I'm leaving, I said to him, hey, Joe, can I ask you one more favor? He goes, what now? Like that. I said, can I take the chair I was sitting in? He says, take the chair. I remember taking the chair and I carried it down 6 flights of stairs over my head, threw it in my backseat of my car. I think I still had that chair until about 2 years ago. But, it really stems from where do you want to be? So I tell everybody new that I meet, I got to like interview you, right? Like you got to look in the mirror. You got to determine what type of trader you want to be, right? Day trader, swing trader, long-term trader. What asset do you want to trade? Are you doing this part-time? Do you have a full-time job? I have heard it all.
Right.
But there are so many people. I know people in my room, right, in my channel who are working and listening and trading on their phones while they're working.
Yeah.
It's insane. So, but they tell me, oh, I'm on my lunch break. Oh yeah, I'm on my break. Meanwhile, I get it. I mean, I know a bunch of people and I know they're not doing this full time. I just made, 6 handles on the S&P. I just made $1.30 on Facebook. I'm like, so.
Well, so what are you trading now? Is it just intraday, day trading?
No, I focus mostly on the intraday moves in the market. I look at the big ETFs. I look at a lot of the mostly again the futures, the indexes, oil, gold, and And then I look at a lot of the big cap stocks, the Boeings, the Facebooks, the Nvidia, the Netflixes, the Apples, obviously, Microsoft, Goldman, you name it. I have
You
about,
trade options and shares.
yeah. So basically, then we'll get into, again, if I call a big move like the buy reversal, people, I'll say, listen, if you don't want to buy the futures or you don't want to buy the underlying ETFs, look at the weekly call spreads on these, you know. So volumes are jumping. As a matter of fact, I was on the phone with an owner of a member firm. I'm having dinner with him next week, and he told me volume he thought was going to peter out. It's going through the roof. You know,
there's a little bit of taper off, like the Santa rally. The volume kind of died off at the end of the year.
Well, it's quiet for it was quiet for a couple of days.
Yeah.
But overall, in the end, you know, you got to think about the fact that people want to get involved and they want to learn. That's what Trade Easy is all about. Me teaching dynamically. Nobody wants to learn sitting in a classroom. People want to.
When will you be launching Trade Easy for the viewers so they know? Yeah,
so we're going to probably, hopefully, keeping our fingers crossed here, our soft launch January 15th to the 18th, and then doing a full push come the first week in February. I mean, my streaming channel is going to be under $20 with a coupon, maybe 10. And then I got another package where you get the streaming and all my educational courses for like under $60, something like that. And then the streaming channel with the courses, and then my weekly workshops, which are an hour a week, just going over so many of the great strategy patterns that I teach. You're talking under like $70, $80. I mean, so I'm making it so inexpensive where I want the average person to really learn. And I mean, I have people in Russia, Brazil, I have Australia. I mean, I have people all around the world that are just flocking to this type of learning, right? Dynamic learning through streaming and showing the angles that I have in my studio, to be able to zoom on my telestrator, to design it, to show, point. This is
live trading.
And say, this is what's going to happen next. Boom. The low, like before, I said the lows are in. I got a buy signal here, buy divergence. Boom. Now, for certain, I got a buy signal around 74, and we went right up 20 handles at the end of the day. $2 on the spiders. So you're able. So anybody who says they can't call market direction, I laugh. And it's not because I have an ego or anything like that. I have a proven methodology in what I do here. But the average, like DocuSign. So when you go back to your original question, right?
It was DocuSign, PayPal, and Alibaba.
Right. So I don't believe in averaging down. If you want to take a position, you better put a stop in. If you're long Alibaba, you better put a $7, $8 stop in, okay? Or buy more and then put another stop down there, and that's it.
Do you do stops on percentages or just on the dollar amount?
Everybody's different. It depends on your account size. You know, you can go percentages, or you can say, okay, I'm going to risk this amount of money. There's no proven theory or science because everybody's account's different. Not everybody has the exact same account funded the proper way. So somebody might have $5,000 in their account and they're buying Alibaba. You know, they can't buy 100 shares, but they could buy some. And then if it drops, you know, but most people will say, yeah, screw it, I'll hold it long term when it goes against.
A lot of people with the smaller account sizes are buying options, naked calls, a lot of risky stuff. And I think with naked calls is a thing that, you know, we never recommend to anyone. But
you mean buying calls or selling calls?
Buying calls, you know, buying calls long. They're not. See, people need to learn that you get the shares. You can sell calls against 100 shares. You can write.
Well, they could do. What was it, a buy right or something like that? And
you could just sell the calls out, or you can literally, like, on most of the retail traders.
But I think what people don't realize is that, like, what I didn't realize on my first trade, that when you're buying a Fed 50 call at 2 3/4 in October, you got 5 months and the intrinsic value starts dropping.
Right.
Especially over weekends. People don't realize. All of a sudden they wake up and, you know, they may be long an Apple call. I'm just giving you an example. They bought it at 3 and it's hovering around 320, whatever, something like that. Next thing on the weekend, it's 280 bid.
Right.
On Monday morning. They don't realize that over the weekend.
Well, Tesla's notorious for that. So Tesla, you buy a call, it'll be $23 a call, $2,340 per call, per contract. And then the next day it drops half in value, 50% gone.
Well, also the volatility. I mean,
yeah, that's because of the volatility, right? The stocks we cover on Wall Street Tactical are all undervalued stocks. Sometimes we'll discuss like stocks that have dropped like at this massive percentage: DocuSign, PayPal, Alibaba. If we always recommend buying shares, not the option call contract, unless you see it moving in the general direction that you want. You could probably buy some.
I mean, if you bought PayPal or any of these other two, and it starts rallying $2, $3, $4, $5, $6,
yeah,
you got two options here: sell it outright or sell a call against it. Right? I mean,
yeah. If you sell a call against it and it keeps going up, you're just hit with the stock. That's the worst that can happen to you. Where if you buy a call and the call goes to zero, then you're
you're like me. I went down to $0.125.
Exactly. But at the same time, you can buy those calls. You just need to set the stop loss. It's easy.
Well, exactly. If you're going to do something like that, you got to have preservation of capital. You have to have discipline. You got to say, okay, I'm wrong. That's it.
And for the viewers out there,
nobody wants to admit they're wrong. That's the big problem. It's like
just a quick thing for the viewers. What we're talking about, like we're talking just to make this specific for everybody, and then we'll get to closing. PayPal has dropped. It's lost all of its annual gain almost of 2020. Lost all of it. People are looking at PayPal as a deal, like because it's lost all of its annual gain. Now, if the market corrects, it could go down further, right? If there's a correction because of interest rates, or if general market goes in a negative direction, there could be even a further correction. So if you're going to do that, you buy the stock, you buy the option, but you set your stop loss of the option. That's what we're talking about here. On the option, you can set a stop order and it immediately executes if it goes down. Sometimes they don't execute, but you can adjust.
I'm not one. Again, I told you that I'm very big into aberrations, right? When you get big blow-offs on the market or big significant declines. I'm not talking a 500-point decline. I'm talking a monstrous decline where I know,
like COVID-19, March 20.
Yeah, I'm in these, long-term capital, the crash of '87. I mean, there's a bunch of them, and like even in I think the March of 2020, I think I bought UPROs, which are the S&P long ETF. So I mean, I didn't hold it for 5,000 points on the Dow, but I made TQs I bought. So for me, I find buying indexes like that a lot better because I don't really want to do the fundamental research on the company. Why did PayPal drop the way it did? Why did Roku drop the way they did? I don't want to overthink anything. I think indexes or ETFs really play a better role for me personally. But I mean, I think a lot of people would agree. Than playing an individual name, you don't have to worry about so many different companies and this and that, and why did Roku drop from 400 down to 200 per se. I remember a guy. Back 4 years ago, he told me you got to buy NVIDIA. Yeah, and I said okay. He said, I'm telling you, this NVIDIA is going to go. I didn't ask questions, but he was dead on. Stock rallied about 500 points, right? But overall, when you talk about these three names in particular, right? Where's the bottom? I mean, could PayPal go to 115 and then bounce 20 points? Could Roku go to 155, 165, 175, 185 before it rallies up to 250 and then fall down or maybe establish a new trend to the upside? I don't know. It's just, to me, if you're going to play that game, you got to
know where the bottom is.
Right. It's like catching a falling knife, and you got to put your stops in place. And that's really the simple only answer that I can give.
Well, Steve, we want to thank you for your time today, and everybody. Steve Kalayjian here. Trade Easy. It's going to be launching soon. We're hoping at the end of this month into next, and we'd love to have Steve back here on the channel, Wall Street Tactical again. And we're going to be covering. You'll see on our channel, there's a lot of stocks like Tetra Biopharma. There's Illustrato. There's a lot of OTC stocks. There's also stocks that are undervalued in the low price range. We do cover
the retail investors like that. They like to potentially be on board, as I stated earlier, to be in the biotech space, and because if something does hit, boom, you know, you can get a monster run from $2 to $50 run. You know, I mean, I've seen it. I mean,
we'll be having John Zadar on this channel too, and he's kind of he did an 89,000% verified gain on Cyberlux Illustrato Pictures OTC markets. So
well, he knows the company. He knew again. I'm so busy based upon what I'm doing all day long. For me to sit down and do a fundamental analysis and have analysts really dig into the company. You know, I'll tell you a story really quick before we go. So back in the 90s, I was very good friends with a guy who was one of the top research analysts in Boeing.
Okay.
This guy would jump up and down like a baboon and tell me, you got to buy Boeing, you got to buy Boeing, you got to buy Boeing, you got to buy Boeing. Stock was 28, 32, 35, 26, whatever. It just kept on moving. But every time he would tell me, this stock was just going. So I think the stock went from 26 up to 40, 44, 45. And he said, I told you. And he said, still going higher. Well, back then, he was allowed to be on the Boeing Corporation on their premises. And he would see all the shipments, all the orders, everything. You can't do that today. You know, you'll be wearing an orange jumpsuit. You know.
So this has a couple questions that we got in. So there's just two quick questions. What is back testing in algorithmic trading? Number one, and then number two, how much of trading is algorithmic these days?
It's a great two questions. So when I built my algorithm, I'm not a firm believer in back testing. I literally took 3 years of my life and forward tested.
Okay.
I don't believe in back testing at all. I think it's trouble. I think there's a lot of false data.
Mm-hmm.
And I don't know if you have enough time, but a classic story with a guy who tried to sell me a system, or actually was selling a system for a staggering amount of money. And when he was doing the back testing from back to 1960, he asked me if I could look at the data. I said, like, I got nothing better to do, right? So I said, I'll take a couple of hours. Well, that couple of hours took me a whole week. And when I called him and he came down to see me, I said, your data's wrong. He said, what do you mean my data's wrong? Can't be wrong. I said, yes, it is wrong. He said, you just put here in 1961 that you bought X amount of shares in this company at this price. How could you be buying 71,000 shares of this stock when the average volume for that day was 21,000 shares? Hello, now he had thousands of these. So I was like, this guy's crazy, you know? I had all the things spread out on my desk for a whole week. And I'm like, look here, look here, look here, look here, look here. You're saying you bought 106,000, I'm just giving an example, 106,000 shares of this, but the volume was only 54,000 shares that day.
Yeah, it's not possible.
So when I created my algorithm, my trend algorithm, I did not believe in any backtesting methodologies at all. I said, I'm going to take it. And back then we had AOL Instant Messaging, and I would get something and I would give it and shoot it to the top guys I knew. Mm-hmm. And I'd say, hey, I'm getting a big buy signal here in silver. This is what's SWAT. You want to take a small position. I'm getting a big buy signal here. And I'm just giving an example on IBM. I'm getting a big sell signal here. I'm getting a buy. So it was forward testing that I really firmly believed in, because you may get a bad tick, you know, in a back test, and you could screw up the whole back test. You could be long and you get a big bar up or something that sold it on that bar. And then that bar was just a bad tick from the exchange.
Great answer. I mean, this is exactly what people needed to hear.
Yeah. So I'm not a firm believer in back testing. I believe if you're going to write, like we own a patent on a piece of technology called TrendLens, and we competed with a company called Prodigio. We actually own the patent where you can drag and drop using a mouse and create and link and create your own strategy without using any lines of code. It's like TradeStation, you can use easy language. This was creating boxes, linking all and everything. It was ingenious. But we did end the bar, which was a mistake. I wanted to do intra bar for the entries. But the back testing results always were like fantastic. But when you forward tested it, I mean, it was like nowhere near the result. So I'm very query on back testing. I don't believe it. I believe you have a strategy, paper trade it, simulate it, whatever, trade it. And then once you start building the confidence, you run it.
And how much of the overall market
you
is
run it for a period of time? What's that?
How much of the overall market is algorithmic trading?
I would probably say it's about about 50%. I mean, I don't have a proven number, but about 50%. About, you know, I tend to think, you know, 40% is institutions, and the other 10% is retail.
Yeah.
And do you use your tools just as indications, and then you verify it?
So if I could show you, but basically, the way every study I have on my application, no study could be edited or deleted, right? So I did all the research, and I look at about 5 or 6 things that a couple were custom, couple were in the I had put in, but when I did the research on this, it's like 80% of the time I'm using 3 of the 4 indicators, and then 20% of the time I'm using all 4 of the indicators. But what I've proven is you can identify trends, reversals, and the icing on the cake, if you're a trader in short, day, intermediate, long, is picking up divergences. If you can master the art of divergences in technical trading, right, you've mastered the art of trading. It's the hardest thing in the world. But when you have technology and you can see things, that'll help you. Now, going back to your second question, how much of this, I don't really know. I mean, when you see 20,000, 25, 30,000 contracts trading on a 5-minute bar on the S&Ps, it's not Joe Retail doing that.
No.
It's the algorithms. It's the high frequency guys.
Right.
You know, it's all the systems lining up doing all that, you know. But guess what? You got retail people on the other end fading it or buying with it and getting involved based upon the move, right? So I think a lot of these moves that we're seeing are algorithmic, and they're causing more people to jump in because of the volatility.
Yeah, and there's AI trading now too.
Yep.
So, you know, human cannot compete at that speed. We can only follow or
well, no, people always say to me all day long in the room, you know, how are we going to compete against these machines? I don't really care, because the machines are going to give me the ability to see a pattern.
Right.
And I'm only trading off of that pattern. You know, when we got the big push up, you know, I said the lows are in for the day, and we missed buying that pullback by a very small fraction. Then they shot right up. Well, some people got it. Some people were a little cautious going lower. But the point is, the technology called the pattern, even though the algorithms pushed it up, and we got that little pullback and then shot up. So, you know, with that being said, you know, the high frequency guys, the AI guys, there's room for everybody, right?
Right.
You know, so what we try to do is, you know, really help people be on the right side of the market, establish consistency, have the discipline intact, have the confidence based upon using the technology I'm giving them, right? The technology. You want to fly a plane? Well, if you have no instruments in front of you, your confidence level is pretty low. You want all the instruments.
You don't know when the reversal's happening, or where
I can see it like that.
Blind.
Yeah. So, you know, and so this is a unique opportunity in the world, because we feel that I know the CEO of Webull. I remember I was sitting in his office, and they had like 7 or 8 people on the 40 Wall Street office. Now you walk into their office, it's like Silicon Valley. I mean, they've grown exponentially. Robinhood's 20 million customers or whatever. But even if they're trading fractional shares, or they're buying 1 share, they're buying odd lots, whatever they're buying, you know, it doesn't make a difference. People want to learn. And what you're doing is great. What I'm doing is great, because we're teaching them that the knowledge that my almost 39 years come this August 1st, and the people I have on your show, my stuff, my show, me, people are giving expert advice on things that potentially are going to resonate with them to the point that it's going to help them as they mature into trading.
Right.
So.
Right. No, no, that's fantastic. So we'll leave you with this. We're going to close the show today, and we'll have you back in the future. What are you trading this week? What are you looking at tomorrow? And you know, you kind of, you don't trade one thing. You're looking live. You're looking at live data.
Yeah.
So just leave the viewers.
Again, I'm just looking for, in intraday, we're looking at 40 different names. We look at the same names every single day because my research has shown me you're going to get 4 to 5 great moves each day on these assets, right? Looking forward here, I'm just looking for divergences now, sell divergences on the overall market.
And for the viewers that don't know what that is, just brief.
So if you took a jar and you
Yeah.
fill it half water, half gasoline, you shake it, you're going to see it split in half, right? So it's like, or you take 2 positive magnets and you can't really push them together. That's a divergence, right?
Yeah.
So divergence is one thing saying something and something else is saying something else. So we could be making new highs, but certain indicators are not confirming that high. That's called a divergence, right? So we look for those, and the moves to those monsters, up and or down. Like I had a buy divergence on the overall market, and we ran 300, about 200.
Well, that's the divergence that we're looking at the S&P right now.
Yeah.
Is there a sell side divergence that's looking, because S&P is
going to get there once we get. I think my target was 48.50, 48.30. We got close, 48.15 or 48.11. And again, I'm looking for a blow off. I don't think we're going to print 5,000. If we do, it'd be like a gift, because I think they're going to just get absolutely kabooshed after that. And that's one of my words, kabooshed. So,
but
is there any chart pattern that you'd be looking for that some of our?
So right now we're setting up for a sell divergence on the weekly and the daily charts. Yeah. So when I'm calling moves like that, right? I'm more looking at the bigger time frames.
The S&P has to have a correction at some point. It's at
Does it come here or does it come at 5,000?
Right.
Does it come here or does it come at 5,200?
Right.
You know, you got.
Or is it even 6,000? Who knows what it is?
Who knows, right? But we wait to see when things are starting to line up and everything, as they say, you get all your ducks in a row, and then that's that.
Well, wonderful.
But again, there's so many different. I get the Gen Zs. You got people that want to, low price. They may want to buy something, and hopefully this is up in 18 months from now. So there's so many different DNAs in the world. What Trade Easy is going to be doing is facilitating all the DNAs in the world. I'm not just gearing towards day trading. I'm gearing towards crypto, to long term, to intermediate term, FX, options, equities, futures. So I want to be able to build a very unique platform that is geared to all the DNAs in the world.
Okay. Interesting. Very, very good. And it seems like you're very similar to final decision trading. You look at the data, you make a final decision, like there's a reversal here.
Data is everything. I mean, mathematics, I don't know if you've ever seen this movie with Jodie Foster. The movie is called Contact, right? And when she's in the desert and she starts hearing these sounds, and the guy says to her when they get back to the laboratory, what is that? She said, prime numbers. And he said, why prime? And she said, it's a universal language. So I believe that mathematics doesn't lie, right? So pure mathematics is what my stuff is built with. So if mathematics there's no opinion in mathematics, right?
Right.
Mathematics are going to tell you something black and white.
And mathematics will account for the news with the volume.
Right. So that's why I always go back to that movie Contact, when the guy says to her boss says to her, well, it's a universal language, right? And she said, yes. Or she said it to him or whatever like that. Why prime numbers, But see, a lot of people are scared of technical analysis, and they shouldn't be. Like I said, it falls into the same category as day trading. It falls in the same category as a pit bull. Why? Don't be fearful of it. So if I say you're going to trade water, does it make a difference if you're going to buy it, sell it, in and out, scalp it, intraday it, or intermediate term or long term? No, it's just that people are getting educated now. I seen this trend when COVID happened, February, April time period of 2020. I started to see an unbelievable amount of people reach out to me June, July, August of 2020, all wanting to learn to trade, day trade, or anything they can get their hands on. So I think COVID made people realize that working from home, they can trade, the markets are going, right? And so they want to be more involved in their in learning. And that's what Trade Easy is all about.
Okay. Well, thanks again, Steve. We're going to be concluding here. All the viewers, listeners, Wall Street Tactical, thank you very much. Steve Kalayjian, and Happy New Year, everyone. And we'll have a lot more coming soon.
Thank you for having me. Have a great night, everybody.
Take care.